It's Tap That Trade time. Joining us this week, Alan Nuckman of St. Paul Research and Phil Flynn, a Fox Business News contributor. Here's your round number one in our trader game, Billion Big Earners. The top 10 hedge fund managers earned $20 billion in 2020. What lessons can people learn from that billionaire blitz?
Money's always to be made, and you can always beat the market. Now, the market moved up about 12%. That's what the average hedge fund did last year. These guys averaged 45%, and so that was a 50% jump over the year before. So the markets, in theory, bad is sometimes the best, the times to be making money.
You know, it's kind of crazy because hedge funds have not been performing as much as they had. And, you know, I don't even know if they should use the term hedge fund when they're basically making money where they're not hedging. Come on. You know, if you're hedging the market, right, against the stock market in a bull market, you should be selling and your returns should be low. You should be making it on the stock side. So, listen, it's about time for hedge funds. Their performance has been terrible the last couple of years, but there's an old adage in the market. Don't confuse brains with the bull market. It does make it a little easier when everything goes in one direction.
Round number two, oil's well, are you? What do you tell drivers now about higher gas prices since crude has climbed 70% since November? And what energy stock do you like to fill her up?
I think it's going to be the summer of despair for gasoline prices. We could be talking $3 a gallon, $4 a gallon gasoline this year. And to be honest with you, it's going to be good for the old traditional oil companies. ExxonMobil, Chevron, they've actually cut back on their refining capacity at a time when demand could really start coming back up. And if you look at what's happened, OPEC was expected to raise oil production. It didn't look like they're going to do that as much as anticipated. So that's going to be a real problem. The other thing is you're going to have tougher regulations on oil production in the U.S., so that is going to restrain production. So get ready for higher prices, but higher oil company stock prices as well.
Higher prices are a positive. It's a positive barometer. Now, nobody liked it when gas was at $1. Things weren't going well when gas was below $1. I remember getting it, not so long ago. So that was a very unique situation. So let's go through the math. Nobody likes it, but an extra $1 per gallon, if you're getting 2 tanks a month, that adds up to be about $40 a month difference, $480. But I think we're going to see the rest of the economy expand and more than make up for the difference. The stock I like is BP. It's also a pound play with the British pound getting stronger and the US dollar heading back lower. This is a stock that's been between 15 and 30 for a year, and now we're around the 25 level. So look for it to get back up to those recent highs. And this was at $50 back in 2018.
I would personally agree with Ellen. Sometimes rising gasoline prices, it is a sign that we're getting back to normal.
Round number three, winners, losers. Warren Buffett is still beating the S&P, even though he recently admitted to making an $11 billion mistake with one investment. What stock would you pick from the Buffett playlist?
Well, his losers are not losers, because if you have infinite amount of money, you can just hold them until they're winners. And that's what he plans on doing for a lot of these plays. So you can't question his picks just yet. One play that I do like that's about a break even for him is Verizon. Verizon's been trading between 50 and 60 now for going on 3 years. So we're at the 55 midpoint. So I like this stock. It's down 5% in the last 52 weeks. So from risk reward, I think that one, jumping on Mr. Buffett's bandwagon would be a good buy.
I think, I still like Warren Buffett and the railroads, especially with what could be a new commodity super cycle. And remember, Warren Buffett got into the railroads when everybody thought railroads were dead. We're not going to use those things anymore. That's so old economy. We're all going to be using tech stuff. Forget the railroads. He didn't believe that. And that's a good thing to learn from Warren Buffett. Sometimes what he uses in investing is called common sense. And don't go with the latest flow. Don't be chasing the latest hot thing. Sometimes sit down and think, sometimes the oldies but the goodies can make you a lot of money.
But Mr. Buffett, I think he likes the railroads because he built them back in the 1800s, didn't he?
He might have been there. I know. I think he put the spike in. Wasn't that him?
Here's your bonus round question for today. Mattel is celebrating Women's History Month with a new Barbie doll. Can you name the famous female who will become that doll?
I'm going to guess Amelia Earhart.
Ruth Bader Ginsburg.
The answer is Eleanor Roosevelt. But you named two wonderful women, and we thank you for being stand-up guys. Business First Am continues right after this. More Business First AM. Check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.